Are you leaving money on the table? Hi, I'm Karla, and I want to give you the top tax deductions and credits available in 2024 that can significantly lower your tax bill. But you already know, before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. Educational credits are so important. You need to be able to explore the American Opportunity Tax Credit and the Lifetime Learning Credits. These are credits, meaning that this is actually going to give you money towards your income tax liability. It doesn't get any better than that. If you are going to college, junior college, regular college, any college, an accredited school, you can get these tax credits. So make sure that you are enrolling in school, that your school is paid for so that you can get the appropriate tax credit in 2024. I love tax credits. Energy efficient credits for your home improvements are something else that you really need to learn about. Many of you may be thinking, what is that type of credit? And it's probably only for a business. You can utilize it in your home when you get energy efficient appliances. You know those yellow stickers that we want to pull off when we first get something? Look at those stickers, because those stickers tell you about energy efficiency. It could be on your refrigerator, on your microwave, on your dishwasher, on your clothes washer, your washing machine, on your dryer, your water heater. These are the types of things that we need to look out for. And these credits actually are worth quite a bit of money, and you can utilize them year over year. So pay attention to the energy credits. Let's not forget medical expense deductions. Man, medical expenses are expensive, to say the least. And many times we may think that we cannot take our medical expense deductions. They do need to be more than 7.5% of your adjusted gross income, meaning that if you are making $10,000, you could only deduct medical expenses that are above $750. So you would have to spend $751 to get the first dollar of a deduction. However, many of you are out there doing that when you're doing co-pays at your doctors, when you have out-of-pocket expenses, when you're paying for long-term care insurance, when you're paying for Medicare insurance out of your paycheck, when you're paying premiums to have insurance, dental insurance, prescriptions. All of those things count as your medical deduction and your miles to even get to the doctor. So make sure you're paying attention to your medical expense deductions. State and local taxes are deductible as well. We call state and local taxes SALT, S-A-L-T, for state and local taxes. You want to make sure that you review these deductions. Now, for many of you that are in a taxable state, your state income tax withholdings is going to be part of your state and local tax deductions, but also your DMV fees, also your property taxes. And some of you are in states where you actually do pay a local tax to your city. Make sure you're reviewing it and max it out to the $10,000 that they do give us. So we do not want to forget about our state and local tax deductions. Child and dependent care credits are important. It is so interesting how much it costs to have child care. Oh my gosh, if I was having kids now, I'd probably have to be forced to be a stay-at-home mom because child care is so expensive. Therefore, you want to make sure you are claiming that child care credit. If you are taking your child somewhere to be cared for, make sure that you give that child care provider a W-9 form. It is an IRS form where you can get their EIN number so you can make sure that you're able to get that child care credit. Now, I want to make sure that you understand that there's a difference between taking your kid to a care provider and having care in your home. If you have care in your home, there's a completely different form that you have to fill out. But this is specifically for when you have your kid going to a child care provider, after school program, things of that nature. You want to make sure you maximize those child care expenses and get that credit. Year end is here before we know it, and we want to make sure that we're maximizing credits because credits are better than deductions. Yes, you heard it here. Credits offset actual tax. Credits are dollar for dollar. A deduction just goes against income, lowers income, but a credit goes against tax. So if you can get a credit, always opt for the credit. And now that you know better, you gotta do better, which is the reason why I want you to like, comment, and subscribe, and share this with a friend and tell them to give you credit if they ever call and book an appointment. Why? Because credits are better than deductions.